Hey, it's Todd Ault, and welcome back to Wall Street Words. Today's word is margin account, one of my favorite things to trade on, margin. What does that mean? It means if you have $100,000 in your account, let's say, and you want to buy $200,000 worth of securities, you can do that if the underlying security is marginable. Now, broker-dealers determine their own margin rates and the interest rate you're charged. For example, with recent volatility, some stocks are not marginable. Some stocks under $5 you can't borrow against. But traditionally, stocks over $5 listed on a national exchange can be margined. Now, once you sign this margin agreement, you can buy and sell securities on credit. I do it all the time. Hedge funds do it all the time. It's a way of leveraging your return. However, when you're on margin, things go against you, you still got to pay it back. We all learned the hard lesson in 2008, 2009 with margin. When you borrow too much on margin and the stock goes down, you can have a margin call. And if you don't meet it, your margin account will be liquidated. Today's word is margin account, and an important trading tool I use every day to trade my accounts.
Hey, thanks for watching Wall Street Words. Please subscribe and hit that bell below. If you think this video adds value, please share it with somebody. By the way, if you want to watch more Wall Street Words videos, there's 2 videos right here you can watch right now. There's new videos every day. Thanks for watching Wall Street Words. Always great things happening here.